In this video, I want to talk about the concept of relative strength. I have noticed that a lot of traders do not understand relative strength, and there is some confusion here. So, let me clear out the confusion. There are three types of relative strength that you will come across. One is the relative strength index, which is the RSI indicator. That is not what I'm going to discuss today. RSI is a different thing, it's just an indicator. Okay. The second is something called as relative strength when you compare the price of a stock with an index. So, for example, if I take the Indian stock market, if I compare one stock with the most popular index in India, which is the Nifty 50, when I compare both the stocks' performance, that's called relative strength. If let's say the Nifty goes up 10% in 2 months and the stock goes up 15% in the same 2 months, then the stock is said to have a higher relative strength. And over a 1 year period, if the stock has done better than the Nifty, then you can see the slope of that relative strength line going up. So which means that the stock has given better return than the index. Okay, that's relative strength line. Okay, I am not talking about relative strength line in this video. I am also not going to talk about the RSI indicator in this video. I am going to talk about the relative strength ranking which MarketSmith India is using. Okay, the ranking for every stock is from 1 to 99. It will have one of these ranks. Okay, now I want to discuss with you how they come up with this rank and how is it helpful for us in reducing the risk in our trading. So as you can see here, there are 4,988 stocks in India as per the MarketSmith India database. So roughly 5,000 stocks. Now here, if I put a filter, just a second, I will apply the filter here. Okay, this is the filter. So this is 90 month, 12 month 90 RS. What does this mean? Just a second. Yeah, let me enlarge this. So this is 12-month 90 RS relative strength filter. What does this mean? What is happening here? Just a second. Hold on. Let it stabilize. Maybe because of internet connection or whatever. Let it stabilize. Okay. Now it seems to be stabilized. Now let's try to put the filter. I click here. Okay. So this is 12-month 90 RS filter. Now look at these filters. My first filter is the price strength should be at least 90 or more than 90, which is between 90 and 91. The institutional demand should be A or B. The industry rank should be between 1 and 40. I have discussed this in my playlist called as stock filters. There are a lot of videos where I discuss each of these filters in detail. Okay. So then the price should be more than 20. The average daily rupee volume should be more than 1 crore. Then the average daily volume should be more than 200,000 shares traded in a single day. The price versus 52-week high, the price should not be more than 20% below the 52-week high. And the daily price change, like if a stock has fallen more than 5% in a single day, that's out of my watch list. And basically, the price should be above the 50-day simple moving average. These are my basic filtering criteria. Okay. So I want to focus on this. What does this mean? If you apply this filter, let's see out of the 5,000 stocks, how many stocks come in this filter? See 18. Out of 4,988 stocks, you get 18, which means this filter has rejected 4,970 stocks. You see how powerful this filter is. Okay. Why is that? It's because of relative strength. Let me explain. Okay. So let's take the example of a particular company. So let's take Zomato, for example. Let me open this. So see, here it is written price strength 90. What does that mean? What does price strength 90 means? 90 means this company, Zomato, has done better than 90% of all the stocks in the Indian stock market in terms of 52-week performance. Or in other words, I can say that the 52-week performance of Zomato, okay, is better than 90% of all the stocks in the Indian stock market, irrespective of the industry. That is what this relative strength number means. So basically, you are taking the performance of this stock and comparing its performance, the 1 year performance, with with the performance of each of the stocks on the stock market, okay, which is 4987 stocks. This is the 4988th stock, okay. So basically it's like you have 100 children in a classroom. You are comparing the performance of or the grade of one student with all the other 99 students in the classroom. That's basically what we are doing here. So a relative strength of 90 means this stock has done better than 90% of the entire Indian stock market. So that should give you confidence to put the trade on. You are only putting your money in a stock which is already leading the market. This is not a stock which is lagging the market. It's not following the market. It is something that is leading the market. Okay. So if I click here, see, this is what MarketSmith gives. Relative strength rating indicates strong price performance for Zomato. Okay. So 90 means very good performance. Human nature being what it is, most people invest backwards. They want to buy what is down the most and sell what is up. So basically, this is we are looking at a relative strength in terms of price action. How has the price done in the past 1 year? Okay. The best stocks are superior price movers even before their big price moves. You should look for stocks with price leadership. So basically, what is trying to say here is that a stock which has got a relative strength of 90, it's already doing well. Now, you might think, Rohit, if the stock is already doing well, obviously the stock is likely to come down, right? But that is not the case. Historically, it's been observed that if a stock is doing well, okay, it is most likely to do even better because it has got that relative strength. And why do you think a stock gets relative strength? The stock gets relative strength because people are buying the stock. People are interested in the stock. There is something that the company might be doing right in its business. Okay. Or people believe that the stock company might do well in the future. So, whatever the reason might be, people are interested. The MarketSmith relative strength rating shows you which stocks are the best performance by measuring the stock's performance over the previous 12 months, as we discussed, 52 weeks. That performance is then compared with the performance of all other publicly traded companies in India. So you take the performance of this stock, the 12 months performance, compare it to the 12-month performance of all the other stocks in the Indian stock market, and then you give them a ranking. So this is like it's like in the top 10 percentile of stocks. Now imagine there are 5,000 stocks. Okay, top 10 percentile means 10% of 5,000, which is this is in the top 500 stocks in India. Okay. Top 500 stocks which are doing better than the remaining 4,500 stocks. Okay. So when you are putting your money in such a stock, you are putting it in the top 10 percentile, which is the cream of the crop. Okay. With 99 being the best. Zomato's RS rating is 90. MarketSmith suggests focusing your effort on stocks with a RS rating of 80 or more. So they recommend 80 or more. Okay. But 90 is very superior. 90 is very good. More than 95 is super good. Okay. So this is called as relative strength. And as you can see, the price has been consistently going up since past 1 year. Okay. That is what is contributing to the relative strength. So remember, there are three types of relative strengths. One is the RSI, which is a normal indicator. We are not using that. Then there is the relative strength line where you compare the performance of one stock with the index. That is what is generally done. Technically, you can compare anything with anything. You can compare the Nifty with gold or gold with Nifty or stock with respect to gold. You can do whatever you want. Okay. but that's the relative strength line. You look at the slope of the line, and that line itself becomes the indicator. And the third relative strength is the proper rank, where you compare the performance of one stock with all other stocks in that particular country's stock market, the publicly traded securities. Okay. And if you get something like 90 or more, that's a superior stocks, which is a leader. It is not a laggard. It is not lagging the market. It is leading the market. And the higher the relative strength, lower the risk, higher the position size you can take. Lower the relative strength, higher the risk, and the lesser the position size is recommended. So the relative strength ranking is directly connected to the risk in your portfolio. The relative strength ranking is directly connected to what position size you choose to trade with. So that's my basic discussion on a relative strength. If you have any doubt, please let me know. Let us discuss this. It's a very important concept. Now, if you do not have Market Smith, see, I don't recommend Market Smith. I don't endorse. I am not an associate. I'm just saying that I use Market Smith to save time for myself. Now, if you don't have Market Smith, what you could do is extract a list of all the stocks that are traded in your country, maybe 5,000, 10,000. The US has 10,000 stocks. Get a list of all the 10,000 stocks with their annual performance. So only two columns, the name of the stock and the annual performance in percentage. Put it in an Excel sheet. Okay. And then just sort by descending order. Okay. The best performers are at the top. The worst performers is at the bottom. Now, out of that list, let's say 10,000 stocks, you want the top 10 percentile. Okay. The relative strength ranking of 90 or more. You want the top 10 percentile. So 10% of 10,000 is how much? It's 1,000. Okay. So you look at only the top 1,000 stocks. That becomes your universe from which you will start further filtering based on the whether it's a penny stock, whether it has institutional demand, whether it is near the 52-week high, things like that. Okay. But basically, you start with those 1,000 and then you keep further filtering. So the relative strength becomes your first filter, which just you are just rejecting 9,000 stocks in one shot. Okay. That's the power of relative strength, is generally used for filtering. Okay. So let me know if you have any questions or comments. I would be very happy to discuss this very interesting concept. Thank you so much.